Getting into a trade too late is something we have all done. And it can be really painful because you're expecting the price to continue going higher, but you're the last one into the trade, only for it to then reverse. You end up losing money, probably lose a little bit of confidence as well. But we can soon fix that. So we're going to dive into this lesson now, guys. I'm going to show you a little trick that you could use to actually stop you buying too late. Let's dive in. Right, so inside the chart here of the Euro New Zealand, it doesn't matter what market you're trading, whether you're trading US shares, Forex, indices, commodities, it doesn't matter. It doesn't even matter what time frame you're using. It's a little trick here to realize and understand that's going to help you not get into trades too late, guys. Now, we just got a basic daily chart of the Euro New Zealand because we were looking at this week in our live trading room to maybe look for some downside moves. And for the last 4 days, including today's live candlestick, it's pushed down in value. Now, if you bought in this zone in here, you're losing money and you're probably feeling really bad. Okay, I'm sure it's happened to you in your trading career so far. So you're going to need indicators to give you a reading of when a market is overbought. All right, now you can use a basic MACD indicator here with default settings. It's got a fast line, which is the green one, and the slow line here. Now, when the lines are together, the market, the price could go on a nice explosive move higher. Now, when the lines are together, great. I'm still looking for long sides. The lines are at a reasonable distance from each other. But then the green line starts to accelerate and starts to fall out with the red line. It starts to move away. They have a falling out with each other. But they always have to come back and make up. They always have to come back together. Now, when moving averages, of course, here with the moving the MACD, you're just dealing with moving average prices here. When that fast line accelerates from that red line, it's overbought, guys. All right. It could go up a few more candlesticks, but I never buy when those lines separate. Okay, I call it separation. And you can see on the left-hand side here, the lines are nicely together, moving nicely together. Then suddenly the green line starts to accelerate away, a distance away from the red line, and the price then comes down for a couple of weeks here. All right. So always think when you're going to place a trade, are those lines separated or are they together? You want them together. You want them tight together. So you want them, if you're looking for shorts, you can see here on the left, we're nice and tight together. It means that there's a move going to come. It moves, there's going to be an explosive move in one direction. In this case, it was to the short side. And when the price starts to accelerate lower, the lines start to speed up and then they eventually separate from each other and then price snaps back. Let's look at an intraday day trading example. Here's a 1 hour time frame of a stock in the US called Pony. Now, as a day trader of US shares, you can see here that on the left-hand side on this chart, the lines are nicely together, okay? And the price is going sideways. And then we expand, we push higher with a lovely move to the upside. Now look at the MACD, it's separated. They've fallen out. Now you're gonna ask me, what is the reading? What's the data between the fast line and the slow line? What is seen as oversold or overbought? Separation. And the answer is, you've really got to visualize it. You've just got to see those lines move away from each other. Often happens at the top of a move. And you can see Pony here, it starts to come back for several hours, guys. You don't want to be the last one buying it right in here. So if the price is going up here and you're feeling a little bit of FOMO and you see the line separating on the MACD, do not take the trade. Stand up from your desk, move away from the chart because there is likely to have a pullback. And when those lines come back together, then you can think about getting into the trade once again, okay? But when those lines separate, you do not want to buy the market. Okay? It could go up a little bit more and you're feeling fine. But 100% of the time, I never buy with separation. 100% of the time, because the likelihood of it coming back and retracing, stopping me out is high. Now, you may say, well, the market is strong and it's going up. Why bother to look at the actual lines, and why bother to not get in the trade because it's showing you lots of strength? Yes, it is, but it's getting in the later stages of a momentum move. And you can see the Nasdaq here on the 1 hour time frame. We had this huge explosive move several days ago, and the lines started to get separated from each other, and there was a limited upside until this market sold off quite hard for a couple of hours. Okay, so okay, yeah, you could get a little bit out of it, but I want to be in it down here. I want to be in it on the start of the move. I want to be in it when the lines are nice and tight together. And of course, we use our proprietary trading software to help us even more with that. When the histograms get really high, and we have over 8 histograms, then there's likelihood of being a sideways price action. The price pulls back for a few days in here. Now look, you're going to say to me, I know that, well, the price went up, but it's all well and good looking at something that's already happened. We're talking here in real time. If back in May it was overbought, let's wait for what we call a pullback or a retracement. If it pulls back, then we can get a better price. It's better waiting for a better price than jumping in when there's separation and high histograms, feeling pain for several days, if not several weeks, and then then it goes in that direction you originally wanted to go in. So I always think, guys, my philosophy as a trader is never buy too high on separation, peaking out histograms. Wait for the pullback, because I don't want to sit through pain for several days. That's the last thing I want to be doing. Let's look at a little day trade here and show you exactly the same scenario. Let's look at a short scenario here. Now, the Nasdaq on the 2-minute chart has just sold off virtually all morning here. A little bounce, and then it started to roll over and went red from green, and that sold off. Now let's dive into the bottom of this chart right here. Okay, so you can see that the actual price now is starting to go up. The storyteller indicator, the one that we use here at Trading College, one of our proprietary indicators here, you can use your MACD if you want to, is actually gone beyond 8 histograms, and it's starting to peak. Now if I shorted the market here, what am I feeling? What am I feeling? I'm feeling pain straight away here. I don't want to be shorting it down here. It's going against me on this trade, so that's 929. I'm losing now around, what, 10 to 10, 11, 12 points here. I'm better off waiting for it to go back up into these levels here to look for a new short. But the last thing I want to do is short down at these lows. You can see it going against us here. It's going up. It turned green on the Pro Trend system. Starting to push up. So now if you were shorting down here, or if you were in a short, you'll be feeling like rubbish, guys. I don't want you to feel like rubbish, okay? So I want you to feel good, get into trades and make money straight from the entry if you can. But in principle here, do not short at the lows. Do not buy the highs. Use a MACD if you want to. We've got our own proprietary software here that can do the work for us as well. In fact, we've got a nice little scanner, separation scanner, that actually tells us when the markets are overbought and oversold, and we can actually do a trade in the other direction if you wanted to. But if you're somebody who's swing trading the markets, you're struggling to make money this year, guys, there's a lot of markets been really overbought and oversold. And the classic one here is the Nasdaq. Just look at the Nasdaq. For the last several weeks, it's been climbing beautifully here. It's gone up about 300, well, nearly 1,000 points since we started peaking out here. And that's it. You want to be in on the start of the moves. Okay, every single peak has several months down. Every single one. This one is just going on and on and on. So cautious bulls right at the highs. You want to be really cautious when it starts to separate. It starts to peak out on the storyteller. And of course, at some point, it will continue to go up and you're not in it, and then it will roll over, of course, at some point. It's just that if you're doing that same entry every single trade and every single time, then you're more than likely going to have, smaller winners. You're more than likely to not have big winning trades because you're getting in later. And the secret of trading is having small losses and big winning trades. Small losses and big winning trades. That is the secret of trading. And if you can get in at the start of the move, avoid the top of the move, you're going to do all right. All right, guys. So don't forget to subscribe to the channel, guys. If you want to work with me, click on the link down below this video in the comments, and I'll speak to you soon. Take care. Bye-bye.